Our focus at ARC is exclusively on researching and investing in transformative innovation, so technologically enabled innovation that's moving very quickly now and is really going to change the way the world works. So all day long, that's all we do.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Cathie Wood dives into why Bitcoin and gold can be strong hedges against market volatility, but also why uncertainty still lingers. She breaks it down clearly. Let's watch her explore it all.
President Trump has a very strange way of negotiating, and that's by causing complete chaos, fearlessly causing complete chaos, and then having an agreement evolve. I think what he would love to do, we're hearing this from some members of the administration, you just never know with President Trump. I think that instead of one by one, just pulling together our largest trading partners, and I don't know if they'd call it a Mar-a-Lago Accord, but getting tariffs around the world down, and just as important, getting non-tariff trade barriers down. Now, think about what a head fake that will be. The market has responded as though we are going to see a major tax hike in the form of tariffs. What if the goal is actually tariff declines on balance and non-tariff trade barriers coming down? That would be a huge tax cut. And if we get another set of tax cuts, as well as deregulation, and we're seeing some mind-boggling deregulation already in healthcare that no one's really talking about. So you've got deregulation, tax cuts, and lower interest rates, which we also think are going to happen. This head fake could turn around pretty quickly. We do need to get some agreements here, though, and we need to get a little more certainty than is in the market right now.
Bitcoin is heading into a big week, and traders are bracing for serious volatility. After a strong weekly close, just above $93,500, Bitcoin dipped to retest $92,000 as support. Some traders believe momentum could still push BTC up toward $97,000, but others are warning of a potential retest around $88,000. Market indicators like the stochastic RSI suggest Bitcoin is heavily overbought, hinting that a cooling-off period might be near. Adding to the tension, a wave of important U.S. economic data is about to hit, including the GDP report and the Fed's favorite inflation gauge, the PCE index. With inflation fears and interest rate uncertainty swirling, volatility across crypto and stocks could be intense. Meanwhile, long-term Bitcoin believers like Dan Tapiero are staying bullish, predicting BTC could climb to $180,000 by mid-2026 thanks to rising liquidity. Sentiment across crypto markets is shifting too. After reaching levels of extreme greed last week, Bitcoin's rally has cooled slightly, raising concerns about a possible local top. Analysts point to $92,000 as a critical level to hold if the bull run is going to continue. For now, all eyes are on whether Bitcoin can keep its footing, or if a bigger correction is coming.
We, as you said, Sonu, our portfolios typically sell at a premium to the market. Why? Because our companies are sacrificing short-term profitability, investing aggressively now in order to capitalize on what we believe are going to be massive opportunities. So valuation, let's just talk about the way we look at valuation. We make the assumption that whatever premium our companies are selling at now, in terms of the stock market, that will disappear over the next 5 years, that we are going to face a valuation headwind over the next 5 years, And our analysts have to believe that a combination of revenue growth and margin expansion is going to overwhelm that valuation compression to deliver a minimum of 15% at a compound annual rate over the next 5 years. Now, what's interesting about valuation today, we've worked with S&P to develop a metric that seems more fair to us in a sense, in that we know that our companies are investing aggressively in R&D, much more as a percent of revenue than most other companies. We also know that stock-based compensation is extremely important to our companies, heads down, innovating as fast as they can. So we've adjusted for those two things, enterprise value to EBITDA. That's our chosen metric. And we've done this for both the S&P and for our flagship, ARKK. And today we are within 10% of a market multiple, which the only time I've seen it narrower in my career was last year during August, during the Young Carry trade unwind, when we got to, I think we were a 6 to 7% premium. So we're almost back there again. And so, we've faced 3 major headwinds over the last 4 years. Valuation has been one. That one's done. Second has been the narrowing of the market towards just a few stocks. We think that one's done. We think the market has started to broaden out. And the third one, and this is where it all started, was, first of all, fear of interest rates going up in 21, and then the actuality of the massive increase in interest rates. We think that's done. Those 3 headwinds now, we believe, are turning into tailwinds.
Blockchain investigator ZachXBT has uncovered a suspicious transfer involving 3,520 Bitcoin, worth around $330 million, sparking fresh concerns in the crypto world. The funds were quickly moved through several instant exchanges and converted into Monero, a privacy-focused cryptocurrency known for its anonymity features. This massive laundering operation sent Monero's price soaring by 50%, hitting an intraday high of $339 before settling back to around $289, still up 25% in just one day. While some speculated that North Korea's Lazarus Group could be involved, ZachXBT believes it's more likely the work of independent hackers. Chainalysis added that although privacy coins like Monero offer strong anonymity, most criminal transactions still rely on Bitcoin, Ethereum, and stablecoins because of their liquidity and ease of use. Interestingly, even with Monero's privacy features, there are claims that transactions can still sometimes be traced. Meanwhile, Monero's real-world use is growing, with Spar supermarkets in Switzerland now accepting it for everyday purchases. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.